So welcome to a new weekend. I'll be analyzing GBPJPY in this particular video. So watch out for my analysis on GBPJPY. So all I'm going to do is just to go directly to GBPJPY and I'm going to give you what's happening on GBPJPY. So let's go into the chart. Right from here, let's go on the 1 hour. So I'm going to show you the process of my analysis, how I come about my analysis and I come about all my entries. So that's what I'm going to do with you here, giving you as kind of like analysis, a weekly analysis which I'll be doing with you, and I'll be showing you my strategies which I use also in this particular video. So stay tuned. So this is GBPJPY and let me clear off everything on the chart. So this is what I do. This is what I do before I trade on a new week or in a new week, any particular day. What my strategies permit is for me to go to one or two days before that particular day. So what am I going to do in that 1 or 2 days? What I'm going to do in that 1 or 2 days, I'm going to check what have happened before. Is there any unfilled space below that the market can reverse anytime to come and fill? So that's why I'm going back. So that's my thought process, why I'm going back on any trade on any given day before I position for a new trade. So let's go back for this particular day. And what I trade is, I trade pure, like it's just the price action or whichever way you want to put it to understand. I trade the trend of the market. I just trade what the market is doing. If it's higher highs, higher lows, I'm just looking for a pullback where it can give me a low that I can enter for a new high. So that's just the trend of the market. I trade, I follow the trend, and once it's downtrending, I just follow where possibly can it retest to give me a low, a lower high, so I can enter then to another new low. So that's what I literally do in the market. So I look for a breakout structure because, as I said, I am looking for market trend. So if it's trending, I mark out what's trending, what's making it to trend. It's a breakout structure. Breakout structure means it's still progressing, the trend is still progressing, breaking the previous highs, making them a structure, breaking the previous structures, or breaking the previous high, whichever way you can put it for you to just understand. Just all of these things we are all saying here is just our own terminologies we are giving it. It's just how we understand it, that's how we are bringing it. So you also try to sit down and craft a meaning to something here that they are saying. Now you understand what I'm saying. Just calm down, find a meaning to it, give it your own name that you understand. If you don't understand breakout structure, give it something again. You can give it market progression, you can give it anything. You form your own, form your identity, you understand, form what you can relate to in the market. That is what is going to help you. If not, tomorrow someone is going to come now and tell you another name, you want to go and follow that one. Next time another. So everybody is bringing their name. It's nothing different, it's just the progression of the market. So they call it breakout structure, point of interest, names, a lot of names. It's just the same thing. So find something that that will make you to know that this is what you are doing and this is what you are looking for. This is what I'm doing, this is what I'm looking for. If I see A, I'll do A. If I see B, I'll do this. So you look for that in the market. So that's it, so that you will not be jumping from strategies to strategies. You are wasting your time on that particular trade that you have to take, or that particular mastery you have to gain. So let's go back. Breakout structure, I have it here. It means it's going up, and I take my Fibonacci. I want to see where it's going to pull back from. Is there going to be a pullback that will help me to get in on a buy? Because right now I can't get in on a buy here, it's already going. So I have to wait again for it to pull back. Since it's uptrending, it means it must definitely pull back, continue, pull back, continue. So if it's uptrending, I'm looking for that pullback, join, continue, pull back, join, continue. So what do I do here? I mark out. I have my fib levels, I mark them out, 50, 38 and the 61. I mark them out. So once I mark those out, I delete my Fibonacci. You understand? That's what I use. That's what I've learned from my mentor. That's what and it's the best thing I've learned so far from him. It's the best thing I've learned, because before then I've been just trading everything and it's not even working. I'm not seeing the results. But right now I see what I'm doing. So I place it here. It's just also for you to go and sit down, put in that work that you have to put in that work, that you definitely have to put in the work. So as I said, this is not the current trend. It means there is a space below. You understand what I'm saying? It means there is a space below, but for it, there's nothing impossible in the market. You can reverse there within some moments, you know, can reverse there and continue going up. But I'm not going to wait here right now. You understand? I'm not going to wait here because this is a 4-hour time frame. The market is here and I'm waiting here. It means it can keep going and I'm still waiting. So I don't want to, you know, hold on to this particular level that I'm not trading this level. Why? Because it has break another structure. I can see it here. This is on the 4-hour time frame. And there's another structure here, which is the consolidation I made a video about. And it has break the consolidation again. So these two break of structure, after this particular break of structure, it has given us two break of structure. It means the trend is going. They are leaving you here. You understand? So it might come back here. But you marking out here is to give you some kind of like awareness that there is a zone here. Anything can happen. And if it happens that you see the price taps in back there, what is it? Is to give you opportunity to buy again, to follow for a good trend. You understand? So that's what it is. So I'll have to adjourn this space again. I have to adjourn this space again. If I want to, what I'm going to do is I have to adjourn this space a little. So what I'm going to do, I'm going to use this as a break of structure now, and I'm going to use here. So this is going to move from there. It's no longer there. It's going to move to here. So I move it because the space is large. So if I should go on lower time frame, that's when you see that there is another break of structure here. So this break of structure, there is another one here. So on the 4-hour, I cannot see it, and I will not neglect that zone because it has taught me a lot. That particular things, neglecting those zones, that's taught me a lot. So here now is my protected low. Here now will be my protected low. This is what it is here. After I have gotten this zone, now I can proceed for the current trend. You understand? I can proceed to the current trend. So after viewing all this thing out, I'm going on the lower time frame to look for a perfect entry. So I'm trying to break it down before I go on any time frame to look for any specific entry. You understand what I'm saying? So this is it now, that the price is currently here, and you know, this is what's happening. The price is here. It has break the structure. It has break the structure. So we'll mark out again. This is the last low before this break of structure. That's still the last low before this break of structure. So it tells me something, that there should be a break of structure here which have led to the point of interest before breaking this zone, and there should be another one here that led to the break of structure. So this is where I go on the lower time frame to know what exactly is happening. And before I go on the lower time frame, I have to mark out this zone again. There's a break of structure here, a clear break of structure to the low. This is the last low that led to this break of this structure, this particular one. And for this one, this is the last low that led to this particular break of this structure. So that's what it is there. So what should I do? I mark out my zone. I mark out my zone, my fib level zone. So there's no way I'm going to enter. Before I'll enter and I'll, you know, put my SL below the low and all of that. But right now, I don't do that. I mark out my zone. Just watch out that this zone is going to decrease. This bigger zone you see is going to decrease with time. So what do I do next? I go on the 1 hour. Why do I go on the 1 hour now? I want to check what I'm doing now. I want to check what I'm saying. If it's okay. So you can see, I told you there is a break of structure here. And don't neglect this space. Don't neglect this space. They can teach you a very, you know, very good lesson. If you neglect them, they can make you pay. And you know what you pay here? You pay with your money. You pay with your money. Like any mistake you make, you pay with your money. So that's the break of structure. It needs to be labeled. So that's the break of structure there. And that's the reason why I put my fib from that to the low here, giving me that particular zone which my trade is on. Can even come further because this is the last low. This is the last low that led to the break of that structure. So to tighten more my SL, I'll bring my SL here. Yeah, my SL will be around there. So there are more circumstances or more situations that can bring me back down here, because as I'm going, I'm watching, I'm picking what's happening. I'm looking, I'm watching what's happening. What am I doing? How should I do? Is there any break of structure again? Is that what I should watch out for? I can still come forward. I can still come up. So this doing is just giving you a kind of like a raw breakdown. If I want to enter this trade, I'm not still entering from here. I'll still look for a space that will give me a good risk to reward, a good entry zone. You understand? So this is kind of like a breakdown. I'm just trying to break it down for you, but I'm giving you the awareness that okay, if you are trading GBPJPY anytime, be ready that once you see the market comes down here, it's a good buy zone. You understand? So as a GBP trader, that's what I'm saying. So you just have to stay up. Okay, so I said there's gonna be a break of structure before on the 4-hour time frame. So there's a high here, push down to create a low, and it breaks again to create a higher high. So that's what I'm saying, that on the lower time frame now, it's going to show me my perfect entries. It's going to show me entries that will not cause me to open up my stop loss space too hard. So here is going to be a break of what structure, BOS. Here is going to be a break of structure. So being it a break of structure, as I've said, I don't have anything to do, no complications here. From the high there to the low here, then what do you think? I just mark out my zones, wait for the price to tap in without confirmation, just tap in and buying. Mostly I use orders. So that's the structure. And once the structure start compressing, break of structure start breaking, compressing, breaking, know that it's coming to your zone. That's another thing you should take note of. You understand? If you're trading with me, you can see there's a break of structure here. So you trying to go again, that's why you have to leave the market for a bit. It's not everything that you're rushing. You have to leave the market for a bit. Imagine you want to buy here because there's a break of structure. Imagine what will happen to you. You hit that sell. That's why I told you before the current trend, go back to the previous. Check the previous break of structure. Check the previous trend. What's happening? Once you see that is happening, what's happening on the previous trend? Now you can draw that previous trend. Don't leave it. Don't leave it blindly and go to the next. No, draw it. Then after you draw everything there, go to the current trend. Then it's gonna tell you, the current trend is gonna tell you, is this space reasonable? For me, never will I trade this space because I know it's not reasonable. That something that break structure here, it has not tapped in, breaks another one, then I'm coming to trade this one. What happened to this one? So here now, this is where you know that liquidity is real in the market, what they call liquidity, or you can call it any name. But once they take your money, it's called liquidity. Like once your money is no longer there, your money is liquidity, is the liquid. So once they take it, it's gone. So this is what happened before they say, oh, the market took me a liquidity grab and all of that, all of that names and things. So you put your SL here, what happened? It hits you out, it's gone. It hits you out because this is not the intentions of the buyers. The buyers want the market to come cheaper, but you blindly, or it happens, you just want to buy here, so it takes you out. It happens. It's not your fault. It happens to anyone. Like if you are a trader, it happens. Because they are the one that controls the money, so you are not the one. So, and that's what it is. So after tapping in there, you can see after tapping in the right zone, it goes up and down, but your SL should be something again. Your SL should be below that low. That's why you have to look for a space that will give you a good entry zone. You understand what I'm saying? So your SL must be below that low, at least 40, because it's below here. Anything below here now, I know it's coming here. If I'm out of this trade now, if this trade should take me out, or if I should enter this trade, if I should enter this particular trade, if I should enter this trade here and it takes me out, I know it's coming here, so I'm getting ready to take the money that I took from here. I'm ready to take it back from here. So that's how it works for me. So if it takes me out here also, I'm ready to take my money here. Lest it breaks and I know that okay, the market is telling you that it's changing character. So this is a consolidating market. So throughout these days I didn't trade. Throughout these days I didn't trade. Throughout these days. So this is the overall break of structure. So this one is the overall break of structure here. And this overall break of structure, what it means is that out of this consolidation, the market have break above. What does it mean? We are going. That's what it's just saying. We are pushing up. We are buying GBPJPY. We are buying. You understand? So after that is another break here. So this break is fulfilled now. There is no need for me to be here. So lest it breaks out, this zone is still valid. That's what you should know. Lest it breaks out, this zone is still valid. So I'm going to drag this zone. You see, it breaks out. Now it comes back to tap into that zone because that's the original trade, and I missed some trade here. I went to put something here and it took me out because this is not the zone. It's still in between this break of structure. Any zone in between this break of structure is still not valid. Lest it breaks out of this zone, then it comes back here. Here is still valid. Even if it should tap in here millions of times and it's still inside of this break of structure, it's still inside of this structure. It doesn't break this structure. This zone is still valid. So once it breaks, know that it's coming back here. And if it comes back here, this zone is still valid. You understand? This particular zone is still valid. So what you're gonna do is enter your trade. If it hits your SL, fine. If it doesn't, move to the next trade and take your profit. So after saying that, I know this trade is fulfilled now and there is no space less this one. So there is all possibility that I can trade this particular trend. And if I should go in on that trade, and if I should go in on this trade and it takes me out, what am I waiting for? I'm waiting for here to gain my money back. That's just how it is. Okay, so let's move to the next one, which is the current trend. I have my break of structures here. What does it mean? We are still buying. Let's exchange character, we are buying. I'm not looking for any pullback sell. So, and as you can see, since I've been talking to you about this analysis, I've not tell you anything about sell. I've not make, so it's kind of like a mindset shift. Like I no longer see sells in the market much, so I'm a buying trader now. I'm like buy. That's what is ringing in my head because most times I don't see reasons to sell all these things. You understand? Definitely, if there is a reason to sell, why not sell? You understand? So I told you something on the 4-hour time frame that there is no way I'm going to enter this trade from here. Reason because entering this trade from here now, I'll tell you the reason. So most of you, I see you in my comments or comment here. Once I take trade, it always hits me out SL before going to my direction. You are not targeting. You don't. I'm going to make a video to help you particularly that is having that issues or about taking your swing points. That's what you don't understand. You understand what I'm saying? Swing points. Market takes anyone out, but there is kind of like, a risk that you'll be comfortable with one, and there is a kind of like a stop loss that you'll be fine with. You know that, oh, this one is normal. It's either I don't see something that I need to learn from, or it's just a normal SL. But sometimes, ignorantly you enter a trade and you don't even know where your SL should be. I have done it. Me, I can put my SL here. Like there is no reason why. I'm just looking at this 50.9 stop loss level. I'll say I don't want it to be even 50. I want it to be 40. You understand? So I'm determined by that level and those numbers. So SL is just like it's flowing in constantly, blowing accounts. You understand? But there are some things you realize that you avoid some certain fucking mistakes. You understand what I'm saying? How can you avoid this mistake? Look for swing points in the market. What are swing points? They are key zones which the market have reversed from, which the market has reversed from, either from the high, reverse from the high to the low, or from the low to the high. Those are swing points. They are key levels in the market. So the swing point here is this particular low. Watch this now. This particular low is the low below any place here. There is no single human on earth that is selling here right now, that sold here. They are sellers. What I'm trying to say is that they don't have power. That's why you didn't see the sell. So the buyers which are here have pushed the market to break this structure. It means what? We have to find another new high. We have to find another new high now because here is broken. So we have to find another new high. And if we should find another new high now, let's say this is our new high now, we have to find another low again so that new buyers can come in, because the market cannot keep going. New buyers have to come in, and those people that bought here, they have to take their profits. They can't leave it because these are humans. These kind of species, they are just representations of human behaviors and beliefs. You understand what I'm saying? So they are taking their profits, so the market will definitely, take a breath out, come back to some zone, then push again, picking the new buyers. You understand? So that's why whenever you miss any trade, just calm down to come again. You have another trade to go. So let's go more. So you have to understand the swing points. I'm going to make a real detailed video on swing points, and I have a course from Kojo about swing points, and I can drop it for you anytime. So this particular place is a swing point, and before I draw my SL to this low here, because this is the low that led to the break of this structure, so it's a valid low. that is my my protected low. So I'm trading according to this protected low now. You see this protected low? It's protected low. You can call it anything, like I said before, call it any name. You'll be fine. Be comfortable with the name you are giving to it. You understand? The name that will make you to understand what you are doing. So me, I understand this protected low as a low that is protected. So if it's protected, it's kind of like an armor that is helping me to regulate my lows. If it breaks here, what am I still doing in the market? Please stop my lows. Don't let me to lose money before I realize I'm wrong. Let me to lose a bit before I realize I'm wrong. That's why your protected lows is important in the market. So look now. Look what I'm going to do now. Watch what I'm going to do. So see this entire space. This is a valid zone because from the 4 hour, it gave us that from here, based on what I trade to this low, this is where I am to buy. But if I'm to buy there is another rule that says that I have to bring my stop loss to the protected low. So how can I navigate this thing now? Watch. This is where it comes with where I told you that 4 hour and all those higher time frames, they are just for my overall trend. So now I have to push down to the 45 minutes, 50 minutes now. What am I coming there to do? I know there's a breakout structure. I know I'm buying. So what am I doing now? How can I reduce this space? That's what I'm thinking now. How? So the how is going to come from here. Let me delete this. So I'm going to now wash out what's happening here. Oh, there's a breakup structure in between. Okay, so it's only lower time frame that can show you all these ones. You understand? That's why I'm coming to the lower time frame. Okay, let me even go more to the 50-minute time frame. I want to see clearly breakup structures in between there that the buyers can be interested in that particular zone. Because look, this is what it is. This is what it is. This is what you should understand. I'm selling a pen for you. I'm selling a pen right now. So I'm selling a pen right now for, let's call this price now the price of the pen. This level I want to buy now, the price of the pen, 211.414. That's the price of the pen now. You understand? That's the price of the pen. So how many people do you think will buy at this 211.14 of this pen? And there's another price level here which we are trying to draft out. So let's say there's another price level here. So if you take good listening to this video, you understand something very deep. So imagine this is another price level here, and this price level they are selling this is another shop. Let's call it a shop now. This shop, they are selling the price of the same pen for 210, and they are selling this one for 211. Which store will you go to buy? If you have the money, if you have the capital, you can buy from here. That is one thing you should note. It's not that it's wrong to buy from here, but if you have the capital not to stress and wait, it's fine. You understand? So having the capital not to stress to go to the other shop now, what it will do for you to cut your, walking to the shop or riding to the shop. It will cut it off. So this is what's gonna happen. Since it has cut it off, you are going to buy from here. So this is your expenses now. It's going to be wide, 118.9 stop loss level. But you that you don't have that capital, that big capital that you still have to sacrifice to walk to that other shop. Now, because of you taking the sacrifice to walk to that other shop, your price is now reduced. Your stop loss is now reduced. That's the money which you are using to buy that pen now is now reduced as gain. So you can use this gain now. After getting this gain from here, you can use this gain now to take care of yourself. Drink some water because you have wait or you have walked down to that other shop where it's cheaper. So that's what it is. You understand? So now it's 51 pips away as your stop loss. But if you have the capital to buy from here, this up zone, you understand? If you have the capital to buy from this up zone, this higher zone, what it is that you have to risk 118 pips. But if you don't have the capital, there is a discount at this particular down shop here, which can give you 551, just 51 in place of 118. So difference of about 550 something pips. You understand? So that's this. With this knowledge, you can know why waiting is very key and very important. And don't be surprised, most times you can come to this shop and it keeps going. Fine, you miss out because you are trying to wait, or you're trying to walk to that shop. The pen is finished from there. So that's what it is. So let's continue going. With this knowledge, I hope you understand what I'm trying to pass. You understand? So let's go again. That's just an example though. So let's go and find a cheaper or a lower price, the place that they'll be selling this pen more, cheap for us, because we don't have that capital that can risk that whole level. So we have to take our time now. Those that have it, they don't mind. It's just break of structure, they enter from there, the market pull down to any level. Since it doesn't cross their stop, it's protected low, it keeps going to their direction. So you understand what I'm saying? So that's the difference of where are the people that have that kind of capital. So here is the break of structure in between trend now. So it makes me to come back down to intra trend, in between trend, in between. So I have to take from the low again to from the high to the low. That's the break of structure. So I'll plot from the break of structure here, it taps in here, I'll drag to here. So what can you see inside all this overall break of structure, all this overall, there is other break of structure happening inside, which is the in between trends. That's the inside trend. Overall trend is different from that one. So there is another break of structure after this particular one has formed, so which is this one. You understand? So this is the break of structure again, BOS. We are calling GBP9 pen, which the price of the pen will be cheaper. So let's take it from GBP so that you just get something here now. So we just want it to be cheap right now. We are trying to look for a cheaper price. So if here is a break of structure, then we can try this shop out if it will give us the opportunity we are looking for. So to the low here, let's mark out our points, which is 50, 38 and that one. So delete our fib zone. So mark out this zone. This is 15 minutes. So if you are following this 15 minutes. So we have a point here right now. We have another zone here. So we are still looking for a way to even lower it more, so that we'll know that once we are entering this area, we are fine with our, our lows. We are fine with our lows. We are very comfortable with our lows. So there's a break of structure inside this whole structure. There's another intra structure here. So to this low again, from that low to this low, it gives us another lower point here, which is this particular zone. Then what should I do? I delete this one. So I've seen something here, and I'll discuss that with you in another video. It's a very key something that if you take note of, you make money from the market. So there's a tab, and I'll do the video, don't worry. I don't want to bring it in here right now, but I've seen it. So that's the lower zone, and I'll push again. So what do I do now? I extend this zone. I bring it down to see where the price is now. Whenever you can come back, if this shop is where we are targeting to buy, because the price is cheaper here to another high. So we are waiting for this shop. We don't want to buy from this shop here. So there is a big difference here. So our loss is not going to be from, so we are not going to take trade from here, and our loss is not going to be from here. So let's bring it again. We are trying to take the trade from here, and our loss is going to be, our loss is not going to be this one, because there's a break of structure. This low has led to this break of structure, and this low has led to this break of structure. So I am using this low now. This is my current low. So my SL is going to be just below this low, 29. I'll make it just 30 to be, reasonable. 30, it's fine here. I won't decrease it more. 29. Why am I going too far? That's fierce. So 29 is okay. 29 is okay. So this one right now, so we are having 29 right now. So let's go and mark out these zones and see what's happening now. The same buys, so we are looking for the same buys, but look at what these lower time frame zones have done for us now. It has given us a lower price range, and it has given us a concise SL level. So we are dragging to the reversal point, that's the new high. That's what we are waiting for. So I even have a zone on the higher time frame. So let's now go back to the higher time frame to set our stop loss. You understand? To set our stop loss on the higher time frame. So if we want to set our stop loss on the higher time frame, we have to go I have to go very high if I want to do this. So if you want to swing this trade, I'm giving you something here that you can do now. So going to the weekly time frame, there is a resistance point, this particular zone that the market might react to. You understand? The market might react to this zone. So what you gonna do? Your SL can be there. Your SL can be there. So this zone is broken, and this zone, your SL can be there. So what are we gonna do? Go back to the 50-minute time frame. So if you want to swing, it's a good swing point for you. So swing from that side to this high. So we are having it there, and this particular one is the same trade, the same GBPJPY, the same place, but not the same place. So let's drag it here. So one you are having 1:2. So if you are risking $100, you are getting $200, 200 point something dollar. And the other one is 1:13. If you are risking $100, you are getting times 13 of the $100. You know what it is. Do the calculations. So you see the difference. So even if you have money, you have to put a lot of money in here. So that's the reason why most times you can buy here, and it will be as if it's going. You can even go to break structure. Then what will happen? Drop, using you as liquidity again. Remember what happened here. If you remember when I was doing the example here, those who bought at this low, this high here, that came back to take them out. So the same thing. That's why there are patterns. You understand? There are patterns that happens in the market if you watch out where you understand. So I'm deleting this. I'm not there. I'm deleting this. I'm not there. So I'm accepting these risks now. That yes, I'm up to these risks. I can, I can take on these risks, and it's fine for me. You understand? So to Wednesday, I don't know. This Monday, this is the analysis. Follow up, mark out your zone if you are following me. Mark out your zones. If you are trading what I'm trading, mark out your zone, and let's wait to see. I've already placed my order before now. I just want to come and share with you. Let me go to some GBP trade which I've marked out my zones, and I've marked out my order. You can see it here. So my order is in already. My order is in. You can see it. My order is in already. I'm just waiting for it to tap in back here. Tapping back here now. What to do? We'll go in again. So this is my order. Let me show to you if you can see it. There are limits order. I've placed it on my both accounts. I'm trading live accounts. So on my both account, I've placed them on my both account, and the risk to reward is fine because I want to swing this particular trade. I'm swinging this particular trade to this zone, 216.00. So I'll catch you in my next video, guys. Thank you for staying.